Hey guys, Courtney here, and I want to share with you the idea of having an agreement with the IRS. So when you become a business owner, you are agreeing to a couple things with the IRS. So the IRS is allowing you the opportunity for massive tax savings, but you have some things that you have to follow in line as well. So you have to be honest and truthful with the IRS. So these are your three kind of promises to the IRS. You have to keep records as proof so that you can make sure that, and the IRS can make sure that you actually have and can take advantage of the tax deductions. And then you also have to allow the IRS to audit you to see if you're being truthful and that you have the records that you're supposed to be keeping. Now, one of the things that I want you to understand is that I don't want you to be scared of an audit, but I also want to make sure that you realize that it's very important to have good records. And as long as you have those good records, you have nothing to fear. I want you to understand the chances of being audited are less than 1% if you earn less than $200,000. And the chances of being audited are 2.89% if you earn between $200,000 and $1 million. And so, and greater, it goes up to 6.42% if you make more than $1 million. So you can see as you continue to make more and more money, obviously the likelihood of you being audited does increase, but it's still very minimal. And the thing is if you just keep access to your receipts, like what you need to be audit proof is to make sure that you have receipts as much as possible, that you keep the receipts, that you have a vehicle mileage log, that you have documentation, you have bank statements, and you have some sort of software that you're keeping track of all of your deductions. Now, one of the things that we do offer at OTB Tax is bookkeeping services, but you can also utilize some other really great softwares out there if you want to do your own bookkeeping. So I'm not telling you that you have to use us as a bookkeeper. What I'm saying is that you need to be able to track your expenses. And an Excel spreadsheet is typically not going to cut it if you are ever audited. And the reason why is because auditors are lazy. Let's just face it. So they only have a limited amount of time in order to perform the audit. 88% of audits are won only because the client doesn't have the access to the documentation. So what I want you to be aware of and to be prepared if you were to ever get audited is that you need to do some sort of bookkeeping in a software, okay? So if you do that, then you have nothing to worry about. The auditors want something called a profit and loss statement, which is how you determine how much money you pay in taxes. Then they want a balance sheet, and that balance sheet, all of these can pull from any accounting software that you're utilizing, and that balance sheet determines that the information being given to them, like the bank accounts, the credit card accounts, your liabilities, like your credit cards or notes payable that you have, that all of these are correct, that information is actually correct. And then they want copies of your bank statements, and they want those all to match. And then at the end of the day, if you have all of those, then they're going to ask for a handful of receipts. So just know that if you don't have that software, you're less likely to win an audit. And then also you're going to be more required to have all of your receipts as opposed to having the software and a handful of your receipts. So what if you're not compliant? You know, they can take away your past deductions. They can also force you to pay back all of your taxes that you owe. They can add penalties and interest onto it. And, you know, guys, I want you to understand, like, again, 88% of Americans lose in an audit only because they did not properly track their expenses. And I do not want that to be you. So as long as you're keeping good records, you have nothing to fear. If you have these good records, you don't have to worry about the IRS disallowing your expenses. You know, but they could, if you don't keep track, they could force you to pay back all those taxes that you saved, and that's not what I want for you. So if you are keeping track, if you just started your business today, or if you've been in business forever, understand that you're required to keep 6 years worth of records for your bookkeeping, and the IRS can go back 3 years for tax returns. They can go back 3 years, but If they find that you were fraudulent in any way, then they can open that back up to 6 years. So just make sure that you're keeping 6 years worth of documentation. This year, the IRS actually put out a study that unless you were in poverty level, earning massive earned income credit and a child tax credit, or if you made over $500,000 a year, you are very unlikely to be audited. And I want to also share with you is that your expenses is not what triggers an audit for you. Your massive increase in income does. So if you go from making $500 a year to $50,000 a year, that could potentially jeopardize and trigger an audit for you. If you go from making $500,000 a year to $50,000 a year, that could potentially trigger an audit for you. So I want you to make sure that you're prepared. Hopefully, in the last 19 years, I've only ever had one client audited, and I hope that for you as well. But I also want to make you aware of what could happen if you're not tracking the proper documents. And the last thing is just that you're actually attempting to earn an income. So guys, do not get started in a business to save money in taxes and then not share that with anyone, because you do need to be able to share with the IRS how you're attempting to earn some sort of income. So, I don't want to scare anyone, but I just want to make sure that we're doing everything we can to make sure we're compliant and making sure that we're keeping and taking advantage of these tax deductions so that along the way you don't get hit with the IRS. And I want to make you aware of it now, so that you can assess for that right now and you can make those shifts in your business. And I will tell you this, if you will start keeping track of your expenses and some sort of software, then most of those softwares allow you to pull in your bank statements, your credit card statements, and so it makes life a lot easier than you trying to go through all those transactions at the beginning of the year, trying to figure out what is a business expense and what is not a business expense. And then along the way, it's going to actually allow us, if you want us to do so, to give you tax strategy, because we know where you stand. So if you don't have a set of books and I don't know what your net income is, it makes it very hard for me to tell you what you should be doing along the way to keep more of your money. So it's not only going to help you run your business better, it's going to help you save more money in taxes, and it's going to make you sleep better at night, because you know that if you were to get audited, that you're taken care of and you have all of your software in place in order to track all of your deductions, and you are not going to lose those deductions only due to a lack of documentation.